Hey ho, good afternoon. Good afternoon, one and all. Hopefully, we're well. Make sure we're coming through okay. Give me a sound check if you can, please. Let's have a look who we've got in the house today. I know that music is so bad, very bad music. On the streaming software we have here, there's a selection of different genres that we can have. This is supposed to be corporate. I tried jazz and hip hop and all that stuff, but this is supposed to be corporate music. I don't think it's very corporate to me. And it does sound a bit like unboxing video, doesn't it? It does sound a little bit like unboxing vibe. There you go. Good afternoon to you all. Hopefully you're well. Emu thinks the markets are so manipulated. Rate cuts new. The rate cuts news is doing its thing. Yeah, well, I mean, I don't know what the big shock horror is there in the rate cut vibe. We've been pretty much pricing this in now for about 3 months. We'll talk a little bit more about it when we get on to the fundamentals in a moment. But yeah, is it new? I don't think it's that new at all, is it? Although we are seeing a little bit of a build-up in the case for maybe a super-duper 50 basis point cut. Again, I'll talk about that in a moment. Okay, welcome to the stream. Hello, Nelson. Hello there. Hello to you. Hello, Emu. Hello, Agnew. Hello to you. Hello. I think you're very right. I think you're right there. Kraktos. The music might be awful, but the stream will be fantastic. Well, thank you very much for the vote of confidence. Thank you for that. Hopefully it will be fantastic. I'd say there's not much going on in the markets at the moment. It'd be the trend continuation trade. So there you have it. If you're new to the stream, welcome. Don't forget to engage as much as you can. If you are new, let me know where you're coming in from, where you're tuning in from. Let me know the level of experience you're at as well. I like to always welcome new people into the stream. We do get a bunch of new people every week, although it's only really the select few of you that actually participate. So I encourage everyone to get involved. Let me know what you're thinking. Let me know you want to look at something. Let me know you've got your eyes on anything, any trades going on as well. Do let me know. Now, of course, on the week ahead stream on a Monday, we also do our prize giveaway, which is guessing the price of gold for the close on Friday. Okay, so and I just use this this gold. Let's have a look. Just go to commodities. So I basically use the first one on the XAU USD list. When you type it in up here on TradingView, it happens to be Oando, I think, but we're not affiliated with any of the brokers or fees and so forth. So, but that's the fee we use. Last week's closing price, you'll see we closed at 3.5. We closed at. No, this is the 4-hour chart. Beg your pardon, I thought that was wrong. Let me just go to the weekly chart. Last week we closed at 3.586. You will recall when we spoke about gold last week that it was I think it's generally the general consensus that gold was going to go higher. I think I also told you to be aware that the non-farm payroll report on Friday will be crucial to that smashing through that resistance zone. The resistance zone there at 3,500, and boy, did it want to push through there. It absolutely did. We had a little bit of a stall there at the first time of asking, but we pushed through pretty much on where was it? Tuesday. We pushed through. If you trade your boomerang trend continuation trade, well, for those of you that trade that, you should be long here. You had that nice little pullback. Here's your high. You hit the new high, pulls back to the previous high. That's your boomerang trend right there. For any of you that are following that, I know some of you are. Some of you emailed me or asking me whether it was a correct setup. But yeah, that was your basic setup. Gold's pushed on through. Gold's pushed on through on the back of the really soft numbers that we saw on Friday from the job numbers. It came in around the 22,000, and now there's a sort of a case building for pretty much guaranteed now that we're going to see a rate cut on the 17th. So gold's liking it. Gold's trading high on a number of reasons. I don't know if anyone saw the blog this morning. that goes out on an email. Basically, gold's been going higher on a number of things. Central banks are big buyers. There's been a massive influx of look at this. I was reading this earlier as well. Massive sort of upswing in the Indian ETFs as well, piling into gold. You know, we're seeing big moves in that. Why is gold pumping? Low interest rates, of course. The opportunity cost of holding non-yielding assets. So there's basically a number of reasons why gold is trading higher. And I'm not, you know, I'm not going to stand in front of that trend. I mean, how far can it go? So we go to 3686. Let me tell you the winner from last week. We had only two people that got really close. The winner pipped it by just a few pips. Guess the gold winner for last week. Remember, 3586. The winner was Charlie C. I don't know what the second name is there. Charlie C. came in at 3590. The closest one after that was someone came in above 36, I think, but 3590, which is a really good call considering that's about 100 points from where it was at the time of the last stream. So congratulations to you there. 3590. Only if you're not listening in, you won't be able to hear me. But if you have to be listening in on the stream to claim your prize. So send me an email now, if you can. If you're listening in, Charlie C, and we'll send you the coupon code to get yourself the $12,500 experienced evaluation program absolutely free. And take it seriously. I know it's only $12,500. It is the lowest. Excuse me. It's the lowest account size that we offer here at FTP. But we've got a lot of traders that start on the low for a number of reasons, whether it's just budgets or what have you. But you know, you can scale these up as well. You know, we've got people that are scaling up all the time on passing the assessment. So you start off from 12.5, then you double it up and double it up. You know, you could be on $100,000 account before you know it. Excuse me. So yes, congratulations to Charlie B. The price was indeed very, very bullish. Okay, so next week's competition now is going to be open. Okay, so get your calls in. I'll just drop the form here. Okay, so there is the form of guessing your gold for Friday's close on the 12th of September. Personally, for me, I think we trade higher. You know, I wrote in the blog this morning that some of you may get. I wrote in the blog this morning that, you know, there's no roadblock resistance here in gold at the moment, is there? There's nothing, you know, there's nothing really to look back on in the past to see where gold could possibly store. At the moment, it's a really, really strong trend. Weaker dollar, central bank buying, investors. You know, when interest rates are coming down, you know, the advantage of holding low interest rate instruments is not as great. So you pile into something that's giving you a return, and gold is certainly doing that, isn't it? Gold was up 4.5% last week. But there's no real level of resistance, is there? What I've done here, I've just literally taken this range. Okay, so when we had the pullback, which came in from 3575, it pulled back to sort of like 3525, which is about 50 pips. 50 pips from when we broke out, which we did retest at one point, takes you up to 3630 basically. So my guess, if I was going to call gold, I'm going to go for 3625, which is not far from here. You most probably will see a break of that this week, but a retest 3525, I think, would be my best guess. Of course, I can't enter my own competition, but that would be what I would be doing. So get your guesses in. I'm going to go for Andrew's guess. Oops, daisy. It's on my keyboard here now. It's running out of battery. Definitely needs replacing the battery on the keyboard. 3625. I'm going 3625. I'm going for. But of course, I can't win my own competition. And if you go for 3625, chances are there's other people doing it as well, and it will be the first one that gets the answer in. Okay, if there's two people having the exact same, I wouldn't have 3625. I have a number around there if you're 3623 or something like that. Round numbers are quite often used by people in this, so you don't want to be duplicating, because then you have to be obviously fastest fingers first. Anyway, that's my guess. Gold might push lower this week a little bit, maybe. It might do, yeah. I mean, that's the markets. I mean, this is just a guess, right? I'm not putting any money on this. It was long gold last week, in and out in a day, but that's basically on technical analysis. This is just guessing, right? This you can't trade this. If you're buying gold now on an account because I say it's going up, that's gambling. It could go either way. For me, I just follow the technicals. I'll look at a really strong trend and try and get in on the trend. I can tell you now, if anyone saw that webinar that I did recently, you can check it out on the FTP homepage. Okay, which is, I encourage you to do this. Let's have a look. I encourage you to do this in your own time. But if you go to Prop IQ on the Prop IQ on the homepage up here, click on there, and it takes you to a webinar which you can watch in your own time. It basically gives you the secrets behind what the successful traders are doing. And I can tell you now that because we've had this run in gold, I haven't checked the data today or Friday, but because we've had this run on gold and the stocks, and there are traders there that are trend traders, I can tell you now quite confidently there'll be quite a few traders passing assessment accounts and getting funded at the moment. One of the stats that we talk about in that webinar is that I think it's 8 times more likely to be successful if you're trading in the markets for more than 30 minutes. Basically means scalpers are 8 times more likely to fail. And I know traders that are following trends, strong trends, are doing quite well at the moment. Okay, it's all about, it's all about getting getting an edge and picking a strong trending market and just going with it, expecting to get into the markets on pullbacks, and knowing that you're going to have some trades stopped out, of course, but majority should, if you pick the strong trendy market, the majority should be winners. So there you have it. But long-term trends are up for gold. So there you have it. Let's have a look. We got any guesses coming in at the moment? Let's have a look. We've got got quite a few coming in at the moment. Why is it not showing me the amounts? Just bear with me a second. I just want to get the amounts. Oh, there you are. It's over there. That's why someone's just messed around with my my Excel spreadsheet. There we go. Let's have a look here. This is a few of your guesses. Let's just have a look, shall we? Here's a few of them. We've got 3645, 3750 coming in here. You know who you are. I don't have to mention your name here. 3750 is the highest one, I think. 3698, yeah, just ahead of 37 again. Yeah, I don't think no one's going lower, really, are they? Oh, we've got 33 down at the bottom here. But everyone's really bullish on gold here. This is just a handful of the ones on the first page, and more coming in as we speak. You will see your own guess in here if you've done it. Well, unless you're on the next page. Yeah, some good guesses coming in there. So I'll keep an eye on those. We'll close this at the end of the stream. which will be in about 30 minutes, I guess. Thanks for that. Paul Joseph, so he's 3650. Yep. Oh, 32. Sorry, I didn't mean that 3265. I meant 3665 is what I'm going for up here. No, I beg your pardon. I'm going for 3625. Got that wrong. 3625 is my guess. Right, folks, let's have a look then at what is driving these markets. What's driving the markets, what we can expect this week. As always, this is meant for education and entertainment. It's not to be considered as investment advice. If I say something, particularly with a view, the stocks or currencies or what have you, it's just purely a view. I follow strategies. I follow my boomerang trend following strategy, which is just basically a trend following strategy, buying on pullbacks. I look at the boomerang reversals as well. I don't trade on a lot of the guesses or opinions that I put out here myself. So why would you be doing it? This is not meant for investment advice as we speak. Okay, so last week, as I mentioned there, a non-farm payroll came in at 22,000 from 75,000 expected. A big slowdown. The Fed still do have a bit of an issue going on because the inflation is still running quite high. We do have inflation numbers out this week. We'll talk about in a second. But certainly the job numbers, which is basically the economy, is really having a bit of a slowdown. You'll recall the last month's numbers, they were revised down to 14,000 from 143,000, I think it was. So it shows there's a big sort of slowdown in the job numbers. That basically means the Fed need to think about cutting interest rates sooner rather than later. Now, I always talk about this tool, which I think is one of the most useful tools you can get out there. It's absolutely free. It's on the CME FedWatch. We talk about it every week, so you should know by now. CME FedWatch tool, just type in. But this is the first time, we looked at it last week before the numbers, but this is the first time now that this has come into the arena. So before we had about 85% chance, 86% chance a week ago of a cut. And the other side of that was about a 14% chance of not a cut. Now there's a 9% or 10% chance of a 50 basis point cut. This is what's driving the dollar lower, stocks higher, and gold higher. Okay, so there's now a call for rates to come down by 50 basis points, 10%. This could change, will change up until the 17th of September, which is just about 9 days away. And this data to this week, it could have an impact on that as well. So now rates are looking as though they're coming down. So keep an eye on this one. It's obviously pretty much priced into the markets. But of course, if the data comes in, if the inflation data comes in soft this week, then I would expect that to increase. If that increases, you can expect to see gold push up to those higher levels. Also, so that was the main sort of catalyst of last week. It was a quite quiet week. We did also have Swiss inflation coming in. Came in negative inflation, negative rates already in Switzerland. The currency is one of the softer currencies at the moment. When you're trading currencies, there's two currencies involved. Buying a strong currency, selling a weak currency is an edge. You just need to, trade. Your edge plays out over time. Doesn't pay out over one trade. It plays out over time. Paul says, "What's your view on the big short that happened after NFP on the Nasdaq? That was crazy." Yeah, we streamed that. I mean, what's my view? Flash crash? I don't know. It was maybe just a dodgy print. The stock markets, you maybe saw some profit taking coming in on the back of it. But if you're watching me on the stream, someone was saying to me that the stocks are crashing. I said, really? I don't believe they should be crashing. And sure enough, within a couple of minutes, stocks were hitting highs again, weren't they? But yeah, I don't know. I mean, it could be anything in this day and age. That's why, Paul, trading the news can be very, very, difficult. It doesn't, markets don't always do what they should do. Had you had your stops in there on the stocks, you would have got stopped out, and then it turn around and off it goes again. I don't believe in manipulation, quite frankly. I don't believe that happened over that. if that's what you're gearing up to, but it was just something that happened. But yeah, it was certainly interesting. So basically, the week ended up with gold up 4.5%. Stock markets were pretty much unchanged on the week, but stock markets were looking lower before the numbers came in on Friday, and actually bounced about 1.8% from the lows. And in fact, the NAS again was only up 0.8% on the week when it closed, trading higher now, I think. But again, 2.8% from the lows. So NASDAQ was trading lower before the news came out, and then bounced almost 3%, which basically far outweighs what has been going on in Bitcoin. The stock markets are up about 35% now since the beginning of the year. Bitcoin's only up about 20%. So far outperformed Bitcoin, the stocks. Anyway, Bitcoin was up 2.6%. Almost say that's unchanged for Bitcoin, couldn't you? Dollar is down marginally, but dollar was up beginning of the week, ended up down 1%. Dollar was looking quite strong. Actually fell 2.8%, 2.3%, I think it was, from the highs. So dollar was under pressure after the announcement. DAX was the only index. The German stock market was actually showed 1.8% on the week. Okay, so that was slightly lower, and the FTSE was unchanged really. The WTI was down 3.3% with the Saudis offering more supply and so forth. So stocks are up, and oil is down. So there you have it. Okay, so what's happening this week is actually a very quiet week on terms of the economic data. Really nothing out Monday and Tuesday. That's quite often the case after non-farm payroll. It normally comes in for quite a week following on from that. But we do have some inflation data out of the US, and I think you need to pay attention to that if you're still buying gold and looking at buying stocks. Right? You remember the Fed do have a bit of a battle on their hands at the moment. The Fed have two mandates. They basically have to do two things. That's their purpose while they remain independent, which could happen, could change. But they've got two things they need to basically focus on. That's unemployment and inflation. Unemployment, they need to get jobs. They need to maximize employment. Full employment is what their target is for the jobs. And they need to keep inflation at around 2%, in and around 2%. So this week is an important week for inflation. The job numbers are weak. They're missing their target there, and that's why they're going to cut rates. But they're not missing their target. Well, they are missing their target on the inflation, because the inflation is still running quite high up there at 2.9%. Okay, producer price index (PPI) is inflation number. Right, it basically is what the producers have to pay for their raw materials at the factory gate, which of course means they need to pass those prices increases on into the consumer. Okay, so if general prices are going up, then of course that is inflationary. So we'll pay attention to that on Wednesday, but the main number will be out on Thursday when we have consumer price index. It's basically inflation. So you can see inflation ticking up by 2.9%. Okay, now here's my take on this. That's the thorn in their side, the inflation numbers. Yeah. And of course, we've got the tariffs coming in as well, and they haven't really had the full effect. So I think the Fed moving rates more than 25 basis points at the moment without the impact of the tariffs is most probably less likely, I would say. But if this inflation number comes in lower than 2.7%, if it was to come in around 2.5%, I think that's unlikely. It doesn't normally deviate too much from the previous month in the US for some reason. But if inflation does come in around the 2.5%, and the markets are going for 2.7%, you are going to see that futures rate for the Fed rates increase in terms of the 50 basis point cut, and you will see without a doubt gold trade higher, significantly higher, if we come in with those low inflation numbers. Okay, and if it doesn't, well, trading the number itself, we will stream it live, by the way. I'll be giving away another trivia account as well. So come and join me for that. Make sure you sign up to the YouTube channel here so you know exactly when we go live. but it'll be at 1 o'clock on or 8 a.m. Eastern Standard Time in the US. We'll stream it live. But say if it comes in less than 2.6, 2.5, something like that, you can expect the stocks to fly, and you expect to see the gold price push higher as well. If it comes in higher than 2.9%, if it was to come in at 3.1%, then you are going to see, I think, the stocks come under pressure, and I think you're going to see gold maybe have a retracement as well. And I think there's there's obviously no roadblock resistance up there at the moment, but that will be the sort of the trend. So I think these numbers are important this week, more so than most weeks. The CPI, as you know, is not the most important number that the Fed rely on in their inflation sort of outlook. They tend to look at the PCE, the personal consumption expenditure, more so, and that came in around 2.9% as well last time. But nonetheless, it's going to be important, and this number will move the markets this week. Yeah, okay, fairly unlikely of a low CPI. Yeah, I tend to agree, especially if you look at again the tariffs and you look at the PCE. But the only, I mean, I don't want to go too down the economic route here, but there's something known as what's known as the Phillips curve. You can Google it. The Phillips curve. It's basically the inflation relationship between that and employment. Okay, by some economists called Phillips, I guess. Anyway, the Phillips curve basically links the two, the employment and inflation. So there's a call to say that as the jobs market tightens up, i.e. less people in work, less people finding new work, unemployment going up, that will have a negative effect on inflation. Okay, so depending whether you believe that or not, but less people working, less people spending money, less pressure on prices. You can't have PPI high, bad jobs numbers, and nothing happening to CPI. No, you wouldn't think so, would you? And that's it, really. Friday, we've got a prelim. This is the University of Michigan consumer sentiment, which is expected to show a slight drop. This is like a survey. Central bankers love a survey. They love a forward-looking survey because it basically tells them an early indication of what the sentiment is in the economy. This, I think, is about 500 consumer in this panel in Michigan. Are they positive about the outlook, or are they negative about the outlook? So red flag on all the calendars. So it is a market mover. However, I do think with the inflation data out and the recent job numbers, I think it might be less significant this month. But there you have it. Okay, so let's have a look. Anything you want me to look at? Let me have a look at it. Let me know, and I'll see if I can jump on for you. As you know, we always do this roadblock resistance. I've told you where my roadblock was. Not even a roadblock resistance. There's no real resistance in gold. I think 3625 is a level that you might see it hold. It's basically the 100% extension. Markets love 100% extension, 50% retracement, 100% extension. The markets absolutely love those. Do your own analysis on that, but I think you'll be amazed how many times when you see a breakout of a range, how the target happens to be 100% of that range. So that's the only target I can have. I also quite like the 1618 extension as well as a potential target. So I would say a 1618 extension on the fib tool. I don't know if I've got it on my fib tool, have I? I probably haven't. So no, I haven't really got it on. But that would be my level there. Stocks, again, all-time highs in the stocks. S&P 500 hit all-time highs last week, up there at 653. We're pulling back now, and I would say that if you're looking about getting into stocks, everyone's saying stocks are overbought. Well, that's what we like. This pullback, I mean, look at this pullback candle, this 4-hour pullback candle from Friday, straight back into previous structure, and puts in a low wicked candle, followed by a high wicked candle, another low wicked candle. This price action is is bullish. Look at that pullback. It must be about 50% of that candle. We must be going high on there. If you're trading higher, I would be looking at the roadblock resistance at 6530. The S&P, sorry, the Dow. Gosh, 45,000 for the Dow. 1, 2, 3 tops here. Bearish engulfing pattern. That's a naked setup. That is a naked setup. For those of you that trade my naked setups, by the way, if anyone doesn't know what the hell I'm talking about, all my trading strategies and my education is available. Here it is. If anyone's interested, it's all in here. This education. We can come to all this, loads of videos in here. You've got Simon's psychology course as well. You've got strategy videos, boomerangs, naked trading strategies, lots of psychology, technical analysis, the mindset, lots of downloadables as well. You've got trade journals and false breakout strategy there as well. I used to love that false breakout strategy until I started culling all my strategies and just trading a couple. But great strategy there as well. You can access this, as you know, just by going, if you take a $50,000 assessment account, which doesn't cost very much these days, there's good deals on those, $50,000 or $100,000 assessment account, and just use the code. Have I got the code here? Use the code POPIQ on the checkout, gives you access to all this, and also gives you a live one-on-one with me, should you be interested. I've got quite a few one-on-ones this week actually booked up. We'll send you a calendar, and you just put in the. So I think this week we're booked up on the one-on-ones. I've got 4 this week. I only like to do 1 a day, because they sometimes go on for a while. But yeah, if you're interested in that, then you can get your one-on-one booked in with me as well. Anyway, as I say, the naked trading strategy is one of my sort of the benchmark strategies. It's basically something I've been talking about since 2015. I was when I came onto the education space. It's the strategy that got me out of a lot of trouble in 2005 and 2006 when I was down there on the lower time frame charts, thinking I was a pit trader again. With the color jackets on, it cost me a shed load of money. Until I started reinventing basically everything I was doing, and this is when I came up with this sort of strategy, because I was trying to think of how can I use the candles to try and replicate something that used to happen in the trading pits, where we used to have, when momentum used to really take off in the market, the noise level in the trading pits used to increase somewhat. It used to be just the level of sound increased, but often when the sound sort of dissipated and came to a bit of a tailing off, that often led to what we would call a reversal. And I just basically used price action really to see how we could predict the same sort of replica decrease in sound. And we use this type of price action here. Market's moving up. This is where the noise level would be increasing, getting to this level. Bearish engulfing pattern. It stops above. It's supposed to be not a bad trade, actually. You trade the bottom of it. Your profit target would be the next level of support, which would come in, I would say, as long as you get 0.5 on the trade, risk to reward, you can take it. You mostly get about 1-to-1 on this trade on the first profit target, which would come in at around 44,560, and profit target 2 would be down here. That's when you get the big ones, and you've got really big resistance up here. 1, 2, 3 on the daily, on the 4-hour charts. On the daily, you've got, it's a day strategy really. Yeah, 1, 2, 3. 3 tests of that level. Again, if inflation picks up this week, then you can expect to see. You can expect to see. I don't like that color. Just making it green, dark green. I think it's better, isn't it? There we go. Yeah, you can expect to see. If inflation picks up, you can expect to see these stocks come under pressure. In which case, this would most probably make for not a bad strategy. DAX is doing, what's the DAX doing? I've got a short trade in DAX somewhere. One of my prop accounts going on. Got a nice bearish engulfing pattern here on this pullback. Break of 23,500. Could see this come back down to the low 23s. I would have thought. Test of that 23. Yeah, 23. We've got a whole bunch of bearish price action here. Hits the high. Every reattempt to break out the previous high fails to make the previous high on the daily. Okay, and here you have what we call a boomerang reversal on the daily. Let me just get rid of those lines for a moment. This is your boomerang reversal right here. For those of you that are in that trade, your stops are above the failed swing high. Profit targets would have been down here. It's still looking like a short trade for me. So I think profit targets, I mean, you've got a really good risk reward to trade on that one. You've got a really good, what is that? You got, so down to, got about 3-1 risk reward on that trade there. Still in the trade. I mean, you can trade that on any time frame. Again, if you want to get the rules and all the walkthroughs, just add that to your prop account, and away you go. If you're just here for the free competition, then that's fine. That's mostly not the way you're going to change your careers and change your life, I would have thought. Doing things the same as you did last year mostly doesn't work, does it? If it didn't work last year, you're doing the same again this year. Maybe you should take trading a bit more seriously. Just bear with me a second. Okay, so let's have a look at your currencies. Canadian dollar, heavily burdened with tariffs, under pressure. Aussie CAD, has that got anything going on? Buying Aussie CAD. Aussie's quite strong. Look, this orange line. I haven't looked at Aussie CAD this morning, but it's supposed to be trading higher. Let's have a look at it now. Well, it is trading higher, but let's just have a look if there's any trading opportunities. There you go. You can tell it's trading high just by looking at the momentum meter there. Well, we've smashed through. Let me just okay. So you do have to consider that zone there. Roadblock resistance. This big move, this big 7.5% move in this currency. It's taken a long time, 6 April, which is 5 months to get back up here. This is where it all fell off. If you're thinking about buying Aussie CAD now, that's fine, but you need your profit targets. Let's just have a look on the 4-hour chart where my entry would be. And then so, I mean, your entry really would be there. Your stops are going to be, as long as it's still, your stops are going to be below the swing low. Your profit target is going to be just above, just below the roadblock, just before the roadblock. Get 1.5 to 1. Not a great trade, is it? Although the trend is nice. But the important thing is we've got, I think, really decent support coming in at that zone there. So your stops below, it's most probably not too bad a trade for the pullback. Pullback to 90.30. ECB on Friday, I beg your pardon, Thursday. They're going to keep their rates unchanged at 2.15%. Forward guidance is more likely to be the driver. Euro dollar at the moment is basically being bullied by the dollar, I think. We've got a roadblock there at 1.8. Hasn't got up there yet. But it's looking at these levels. So if you break through here, 17.30, inflation numbers could drive the dollar lower. Maybe as a test of these. And then, of course, if the dollar goes lower, this would, of course, be tested up there at 118. Right, folks. I will have a look here. You have to be naked. Do you trade the German 40? Yes, I do. Naked, because we strip off all the indicators. Just use basic support and resistance. Big levels. It's all about getting the right levels, support and resistance, and some simple price action patterns. All right, folks. I'll leave that there for now. Thanks for tuning in. Got a few entries coming in for the Guess the Gold. I'm closing that down now. So thanks for that. Quite a few entrants today. Picking up 3. Wow. Medulla is coming in for gold. If I may, Medulla, mention your pick. You have gone for 3882. I don't know where you got that number from. 3882 up here. Which is a 6% rise in gold in 5 trading days. Well, you need inflation to come in below 2% for that to happen. I don't have many hats left, but if I had a hat, I'd eat my hat live on camera if we get to 3882. Could happen. Could happen. What do I know? But yes, thank you for that. That is the high. Oh no. Print Z. You're coming in at 3,900. Wow. 3,900 is the highest we've got. It's a big move. Yeah, look, 6% move. I've seen that happen before. I think it was last February. Yeah, I think we had about 8 or 9% move in gold in 2 consecutive months, 2 consecutive weeks. Yeah, we had a lot of people passing assessment accounts because of the getting on a trend and staying with the trend and moving into it. Yeah, anyway, good guess. Okay, folks, I'll leave that there for now. Thanks for tuning in. I'll give the prizes for the Guess the Gold next Monday. And I'll be live streaming on Thursday for the CPI at the same time as today. So that's 1 o'clock, 8 a.m. In New York. So make sure you are there. We'll be giving another 12.5K assessment account away in a trivia giveaway. 3 simple questions. I give the answers, in fact, in my little soliloquy beforehand. And winners go into a random generator and we'll select them randomly. Thanks for tuning in. Have a good week, and I'll see you on Thursday, if not before.